a new chapter in Bitcoin ETF history. And have you ever wondered what goes on behind the scenes when millions of dollars will be flowing to Bitcoin exchange traded funds, ETFs? Yesterday, we got a glimpse of this intriguing world as US-based Bitcoin ETFs experienced yet another record-breaking day. With a whopping 257.3 million pouring in, the Bitcoin ETF scene was abuzz with activity. 3 consecutive days of massive investments marked a clear signal of renewed interest in Bitcoin amongst both institutional and retail investors. And Grayscale Bitcoin Trust, a leading player in the game, reported an additional $4.6 million. Even giants like BlackRock couldn't resist the tide, taking in a notable $93.7 million after a brief hiatus. But the excitement wasn't limited to just these 2 players. Fidelity reported $67.1 million, Bitwise $1.4 million, ARK Invest $62 million, Invesco $6.2 million, Franklin $3.8 million, and Valkyrie $6.4 million. These numbers paint a picture of a confident market. Invesco, as renowned crypto analyst Whale Panda put it, yesterday's ETF flows were entirely positive again for $257.3 million. After the price dipped below 66,000, we had some consolidation and it's now trading above 66,000. No other major news was announced. The fact that the price didn't move with these inflows tells me that there's another party unloading this range. Yesterday's ETF flows were entirely positive again for $257.3 million. At Whale Panda tweeted, BlackRock finally had inflows again for $93.7 million. Fidelity did $67.1 million, and ARK $62 million. Even GBTC was positive for $4.6 million. An old debate resurfaces. However, amidst the flurry of positive news, an age-old concern reared its head once more. Some question the transparency of these Bitcoin ETFs, particularly around the issue of off-chain transactions made by larger institutions such as BlackRock. And Tyler Durden, a well-known crypto commentator, voiced his concern, stating, BlackRock can take as much Bitcoin as they want from Coinbase, and the transaction is recorded off-chain. I'd like to see all of the ETFs' wallets. This means they can borrow Bitcoin from Coinbase to short and are not required to show any proof they hold one-to-one. They're also a 230-day settlement. All settlements are done in cash.
The writing's on the wall, unless someone can find the ETF's wallets on chain.
Reacting to these claims, Dave Weisberger, Chemra CoinRoots, came forward to defend the practices, explaining, of course, they had to do it that way because of the cash creation/redemption. The SEC forced the authorized participants can't touch spot Bitcoin, so must engage in off-chain transactions. As I said repeatedly, in kind would have been more efficient, transparent, but this fear-mongering is nonsense. James Seifert, a Bloomberg ETF expert, supported Weisberger's stance, acknowledging the learning curve in the ETF industry regarding cryptocurrency transactions. He stated, the gang learns about cash creation was a throwback to early December 2023. I pretty much agree with Dave here. And with that said, thanks for watching. Stay tuned for more exciting updates in the world of Bitcoin ETFs. Who knows what tomorrow might bring. Oh, and remember, always going to keep one eye on those wallet addresses. Many of them don't necessarily mean the second periodic. Many of them use folks together, several Conrads, competitive double, or